to start fee-based wealth management in 2006. Mr. Shabbir is recognized and honored as India's most admired financial advisor by White Page India for his valuable contribution to the capital market industry. Please welcome Mr. M. S. Shabbir to begin the session. I request you to take over, sir. Thank you.
Good morning, everybody. Thank you very much for this opportunity to interact with all youngsters from the university and the postgraduate students. Before I start my topic, on the presentation, I would like to miss this opportunity of, giving a small talk about the careers in the as an investment advisor and what it is, because from the sessions that I have seen, it is not covered. Maybe it has been covered in some other place or on some other occasion, but I wouldn't like to miss this opportunity. So let me talk to you something about your careers as to what you want to do after your, academic qualifications and then the post-graduation. Like many may be trying to find out and then go into different areas. There is one area where there's a lot of gap, and that is the investment advisors. Just to give you some statistics and figures about how much investment advisors are needed. I don't know how many of you have heard about certified financial planner, and if any of you are planning to do that course or you do not know about it, I would strongly recommend that you look into this as an option, or at least explore and then get to know the awareness of it. Certified financial planner. I remember about 5 years ago, somebody saying the figures were that we require about 50,000 financial planners in India. That was about 5 years ago. And unfortunately, there are only less than 2,000 which are qualified certified financial planners. So if you talk about the markets, we are talking about the careers, we are talking about financial planning, then I think this is something that should give a little thought to it. For people, for somebody who doesn't want to go into the certified financial planners course and want to go into a smaller one, something like this, interacting with the industry experts and then trying to get a session on it, there's something called QPFP, which is organized by Network FP. So that's a second level kind of a thing. And the third one is that you start with doing some small certifications from the NISM. I see that there are some NISM guests from the NISM, and they must have already given it to you. My recommendation would be that you start with the smallest certification like mutual fund, then you get into the dealers, then the depository and things like that. So the lowest level is NISM certifications. You can have multiple certifications. They are very simple. Just pay 1,500 fee and then go and appear for the test. Then the next level would be the QPFP, which is organized by Network FP once in a year. And the third is Certified Financial Planner. Certified Financial Planner course is recognized throughout the world. There is a Financial Services Board in India. You can have more information and then look into that. The second point that I want to discuss, before I start my topic is, we are talking about investments. So if you're talking about investments and you're talking about the regulators, one thing we should know is that there are 4 regulators in India. And when you're talking about looking at with the Sharia lens, what it means is, are there any opportunities or products from the 4 regulators, The first is RBI, Reserve Bank of India, which looks after the banking. You all know that there is no Islamic banking or there's no ethical banking right now. So that's why it is not available. The reason why I'm talking about it is a lot of people, a lot of investors from the community get trapped into the kind of products without looking into whether these are regulated products or not. I don't need to mention, I don't need to go into the detail, but there are a lot of Ponzi schemes where people have been stuck. Later, probably I'll give you some figures where you'll find out that the amount invested in the Ponzi schemes or unregulated products is multiple times higher when compared to the actual products which are regulated. So RBI, there is no banking product which is Sharia compliant. Next is IRDA. that is Insurance Regulatory Development Authority. Again, there is no product which is Sharia compliant. If you look with the Sharia lens, there's no product at all. While takaful and insurance may be similar, in the similar products, you can do a little comparison of that. There is no takaful product in India. So you can safely say that there is no insurance product which is available in India, which is Sharia compliant. The third one is the NPS or the PFRDA. PFRDA is another regulator which looks after the NPS or the National Pension Scheme. Unfortunately, there is no Sharia compliant investment pension scheme. While it could be possible, the equity product is there, 50% of the equity product is there, and there's a composition of 50%, but still because of the debt, again, there is no products in the PFRDA domain. So which leaves us with only one regulator, which is the SEBI, Securities Exchange Board of India. This is where all observant Muslims, ethical investors, Sharia compliant investors should be in. So this is also relevant to find out why it is important for us to look into the capital market and look into the SEBI regulated products. While the products may not be many, but it has been a long journey for us to get some Sharia compliant products. But before we go into the capital market, let us also talk about how many types of markets are there and what we are going to discuss. Where are the opportunities available? Capital market or the stock market is one. The other is the bonds market. Bonds market obviously is because there's interest based and it's all lending kind of money. So obviously there are no products in the bond market. So we're not going to discuss about that. We are also not going to discuss about the commodities market, because commodities market, very rarely there is any delivery based kind of a transaction, and it is not for retail investors. While there are many who think that commodity trading as per se is permissible, and that is the reason why they go into the commodities market, little realizing that it is not Sharia compliant. Currency trading. Currency trading is another place where people think that currency trading is allowed. It is not. While currency exchange is allowed, currency trading is not allowed. Why currency trading is not allowed? Because there cannot be cash out, there cannot be money on two sides of the transaction. I'm sure in the previous sessions, and Dr. Shariah must have spoken to you about it, but let me touch on it, that money is not a commodity. Money is not a commodity, it's a means of exchange. So while exchange of currency is permitted, trading is not permitted. Now, let's get to into what is called a capital market. As you all know, the capital market has got two options. One is the primary market, and the second is the secondary market. So in a primary market, when the company is new, it raises money from the public, and that is what is called the primary market, which basically covers the IPOs. I'm sure a lot of people are familiar with the IPOs, and it's becoming much more popular. And probably you've got fresh in your mind the Zomato kind of an IPO where people have started every what should I say? As I have seen a lot of students getting into the Zomato, got into that seat. And of late, in the last few months, the capital market has increased only because of the IPOs. But these are all seasonal. Should we invest as a Sharia compliant investor? Should we invest in the primary market? My answer to is no, unless you have got some exceptional IPO which is there. The reason why I say that you should not invest in the primary market is very simple. When you've got more than 5,000 stocks where you've got a history, you've got a trend, you can look into you can do an analysis. Why get into something which you do not know about it? And in most cases, the Sharia compliance status is not known before the stock is listed in the secondary market. So generally, I would say no, but there's no ruling out that. Now we come to the secondary market. When we come to the secondary market, this is the place where the transactions do happen. There's a buyer, there's a seller, there are volumes there. Stocks are there, the number of stocks are many, and that is the reason why you should be into the secondary market. Probably secondary market is the place where we should be in. Now, before we get into the secondary market, if we are talking about the Sharia, let's try to find out what is Sharia and what is the philosophy of Islam and Sharia. The purpose of man's existence is to obey Allah subhanahu wa ta'ala, and in all respects. So what I try to do is try to get some Quranic ayats or verses to find out how we can relate Islam or Sharia with business. So this is what I got. The first ayat is from Surah Baqarah, ayat number 38, where Allah subhanahu wa ta'ala says that you need to be obedient. And that's what I said, that you need to be Allah subhanahu wa ta'ala in all respects. This ayat also relates to Prophet Adam when he was sent into this world, where he was repenting, and Allah subhanahu wa ta'ala guides him and tells him that if you follow my orders or if you obey, then you will be on the right path. But during this journey, we have always this satanic temptations. The second one is that all resources, whatever is there in this world, belong to Allah subhanahu wa ta'ala. So if all the resources belong to him, he is the rightful owner. So so what you need to do is how you utilize it has to be in a moderate way. There should not be an excessive usage, excessive wastage, excessive misuse. So that is where, if you relate with the market kind of practices, what we're talking about today is ESG. You're talking about resources. You're talking about oxygen, which is in shortage. You're talking about global warming. These are all resources of Allah subhanahu wa ta'ala or the creator, and we need to use them judiciously. The third aspect of it is that you need to be just and fair in all your dealings, whether it is with peers, whether it is with superiors, wherever it is, it needs to be just and fair. If you have these three concepts in mind, then it becomes very easy to do business in the stock market or elsewhere. I don't need to emphasize on the forbiddance of interest, because that is what is generally known and everybody talks about it and mostly people think that only interest is what is forbidden in Sharia, which is not the case. At this point, I can remember of a saying of Umar Radiallahu Ta'ala, where he had said that if you want to do business in the market, he said, first learn what is the business, what is transactions, what is the dealings of that. Then you come to the market and do the trades or do the business. Similarly, I would repeat it and say that when you want to get into the stock market or the secondary market, you need to know and understand what is permissible, what is not permissible. Capital market, when we talk about, there's another area that you need to understand is there are two types of capital. One is a loan capital, the other is a risk capital. Capital is wealth applied to create more wealth. So hence, either you start with a capital, loan capital, or a risk capital. Now, Sharia does not approve of a loan capital because it is just lending money. Now, look at the products which are there in the market. Name most of the common products that comes to your mind when you talk about investment. Post office investment, bank deposit, bonds, lending, debt fund, CDs, all these are lending. So lending capital is not permitted. What is permitted is risk sharing capital. So risk capital is more important, and risk capital it generates equality. What we talked about just and fair, it talks about equality, it gives more kind of returns, and also capital is to be used for trading and not for lending. You see, this is one important aspect. When we have capital, it is used to be used for trading and not for lending. So Sharia does not approve anybody's gains without a risk. While the excessive risk is also not permissible, but risk is to be taken So you cannot gain on another's loss. So what does happen in lending? In lending, what happens is that you lend money, you do not take the loss, somebody else takes the loss and you take the gains. That is not allowed in Islam. Again, there are other things like interest is not allowed, excessive uncertainty is allowed. While uncertainty is permissible, excessive uncertainty is not allowed. Gambling is not allowed. Harmful business is not allowed. Why harmful business is not allowed? Because it's not good for the society. Now, it has got nothing to do with Sharia, but it has got something to do generally for all. What I normally say is that Sharia is not for someone, but it is for everyone. If you agree and if you follow this and if you think this is the right thing, then it is for everybody. So risk participation, profit and loss sharing is encouraged. What is good for the public is encouraged in Sharia. So now coming to the secondary market, what is it that is allowed? What can we do in the secondary market, or what is permissible and what is not permissible? If I say that no margin trading is allowed, what is margin trading? Margin trading is that if you have a margin amount or an investment amount of, let's say, 1 lakh, and the broker allows you to do a trading up to 5 lakhs, he gives a limit. And if you do buy in the market, in the morning you buy for 5 lakh goods or 5 lakh stocks, in the evening you sell them, there's no interest, that is fine. But suppose if the market has gone down, normally what do? You carry forward the position. When you carry forward the position, there's an element of interest which is being charged. That is the reason why margin trading is not allowed. Similarly, derivatives is not allowed. Short selling is not allowed. Futures is not allowed. Options is not allowed. Obviously, the question that comes to your mind is that if all these things which are major transactions which happen in the market, what is it then that is allowed? What is allowed is you can do it in the cash segment, you can be in the cash market, and you can buy stocks only on delivery base. Now this looks very tough. Isme to koi maza hi nahi hai. What is there? The whole fun is into the other one. Yes, the whole fun is in the other one where there is a sin, where it is not allowed, where it is not good for society. So do you want to be a part of that, or do you want to be a part where the creator has given you guidance, and obviously the barakah will be in one where you follow the creator's guidance? So a Sharia compliant investor can proudly say that we are, or as Sharia advisors or Sharia investors, we can proudly say that we are 100% into 2% of the market. What it means is 98% of the transactions which happen in the market are not permissible under Sharia. So only 2% is available, what is permitted. And if you are 100% into that 2% of the market, it is a very tough job. But you need to be in that, and that is what we recommend. Now, let's look into what is the Sharia. There is no regulator which says that this is Sharia or non-Sharia, except for passing or giving permission for a mutual fund. There is no active guidance from the regulator. So who is it that manages this, and who is it that gives this guidance? I would like to name 3 companies. One is TASIS, one of the oldest ones, and the first one to do the Sharia screening stocks, screening of the Sharia stocks. The second is Islamically, which is more tech savvy now, and it also has got a Sharia board. So TASIS and Islamically, and also a new entrant called the Sharia Cap Advisors. They have got a Sharia board which gives the Sharia guidance. Now, what is the difference between these 3 companies? TASIS is the one who has done the first screening of the stocks. They are more stringent in the Sharia norms. They do a regular screening of the stocks. They have a Sharia board. They approve they structure the Sharia Islamic finance product, and so on. Islamically is more into screening of the stocks and more tech savvy, where you have an app, you have a web-based kind of a thing. You can check out whether the particular stock is Sharia compliant or not. Sharia Cap is a new entrant. It advises in structuring the products and also has got a Sharia board to approve the Sharia product. Now, when would you call a product or a company Sharia compliant? So the first one is the business activity screening, which means that we look into the financials. The financial companies which are into the financials, they are not permitted. Advertising in media, not all advertising in media, but some of them which are of vulgar nature, they are not permitted. Coke, alcohol, gambling, pornography, tobacco, all these are known to you. So this is the first screening. Basically, there are 4 screenings that you need to do. The first is the business activity. In the business activity also, the major or the core activity of the company has to be permissible. It is Sharia scholars have permitted if the secondary activity is not permissible, and I'll come to that a little later. But before that, core activity of the company has to be Sharia compliant or permissible. The second is there is the financial parameters or financial ratios which they look into it. So I have chosen here the TASIS ratios for screening because it's more stringent, whereas Islamically it's a little more liberal. But there is an organization which has given some guidelines. Based on that, there are different kind of parameters. So the first is debt to total assets. Debt to total assets should be less than 25%. Now, you may say, why is this debt allowed? One of the questions which crops up in your mind, everybody talks about it. When you say that interest is not allowed, debt is allowed in the Sharia screening, how is it that debt is allowed? You see, in a case of mixed kind of a business where there are multi-sectoral companies are involved, both halal and not permissible or haram activities, the Islamic jurists from our major school, that is of thoughts, that the Hanafi, Maliki, Shafi'i and Hanbali, they have said that it is permissible to do it provided there is a tolerance level. Why have they allowed a tolerance level? Because the whole economy is interest-based, and because the whole economy is interest-based, you will not be able to participate in the growth of the economy, and you need to be you have to give some relaxation. Now, Sharia compliant does not mean that it is halal. Sharia compliant only means that you are permitted to invest in such companies, but you need to do the purification at a later date, trying to find out how much is the interest income earned on the impermissible activity. Second, the third criteria. The first is the screening of the activity. Second is debt to total assets. Now, some may say total assets average 3 years assets. Some may say 1 year average total assets. Some may say market cap. That is different, but all are permissible as long as as per office standards. Now, interest income plus 8% of interest-based investment to total income should be less than 3%. Why this is allowed is again because this is something called an incidental income which has come, which you cannot avoid. So because of this incidental income, it is not that main activity of it, that is why it's allowed. Cash and receivables. Cash and receivables is again one area where it has to be less than 90%, less than 90%. Less than 90%. It does not permit to invest, Sharia does not permit to invest in any companies which are all liquid assets. Why doesn't it allow? If the company does not have non-liquid assets, it would only be permissible to trade at the par value of the shares, because it would mean that it is representing only cash money. That is the reason why cash and receivables should be less than 90%. Now, coming to how many Sharia stocks is there an opportunity? Out of the more than 5,000 stocks which are listed in the stock market, on the Bombay or the NSE stock market, or 6,000 stocks, there are 1,334. This number keeps on changing, but it's roughly about 20% of the stocks are Sharia compliant based on this screening. These stocks is a big universe for you to make an investment. And it is said that some of the best Sharia compliant stocks throughout the world are in India. So if you have a universe of 1,300 or 1,200 stocks, is there a need for you to go into the non-compliant stocks? Ideally, it would be nice if you have invest in zero debt stocks, but then the zero debt stocks are also about 166 or so. Most of these stocks are small cap stocks. Obviously, you will not invest or may create a portfolio with small cap only. That becomes a high risk category. So that is the reason why we say that. I think as on today, the highest market cap zero debt stock is Coal India. Okay. So we have a big universe of stocks. Now, what we did is that this is a TASIS, a sample of a TASIS list. Where did they do the screening? Yes, Coal India is the one which has got the highest. I hope you're able to see the screen. If not, I will share the presentation later on. You can have a look at it. So they do a screening of these stocks, and then on a monthly basis. Normally, the results come on a quarterly basis. So they do a quarterly review, and then come out with the list. So they have given a color coding of whether it's a Sharia compliant, and then this one brown one has failed on the investment, kind of a thing. The red one shows that it is a non-compliant company. Secondary business is non-compliant here. So what is compliant today can become a non-compliant tomorrow, or what is non-compliant today can become a compliant stock. So you need to continuously keep monitoring it. One of the things that I have seen is a lot of people, they look into portfolio of stocks which are in the two mutual funds which are Sharia compliant and make an investment in that. I don't think that is the right kind of an approach. Then it would mean that it would be a concentration in the same stocks. So one is that this is a sample of the stocks. This list is available, provided by TASIS on subscription. Same way, Islamically has got an app and also a web where you can check the Sharia status on a daily basis. Now coming to products. What are the Sharia compliant products which are available for an opportunity for you to invest? First is a mutual fund. From the mutual fund, let's talk about the tax savings fund, because the tax savings is something which everybody wants to start with. Those people who are into the service sector or who in the employment, they want to start with a tax savings fund. There is no tax savings fund in India, ELSS. There's no tax saving ELSS in India. Very unfortunate. The only fund which was available was Nippon India Sharia Beast during when the Rajiv Gandhi equity RGSS scheme was the equity saving scheme which was permissible. At that time, there was an opportunity to invest in RGSSs, but unfortunately, many people didn't know about it. So one, there's no tax saving scheme. Why there is no tax saving scheme which is Sharia compliant? Because the community itself is not aware of it, and they do not invest into the tax savings, into the Sharia compliant funds. As you know, there are only two mutual funds which are Sharia compliant. One is Tata Ethical Fund and the other is Taurus Ethical Fund. I see from your program that there are a lot of representation from Tata Ethical Fund, and they must have talked about it. You've got a fund manager who's coming tomorrow from the Tata Ethical Fund. But let me give you a little background about these funds. Tata Ethical Fund is one of the first funds which was called a Sharia friendly, not a Sharia compliant. What it meant was that they were not investing into particular sectors like the financials and others. It started in 1996. The name of the fund kept on changing, but they were the first ones to address two communities with the launch of this product. One is the Muslims, the other is the Jains, because they looked into the requirements of these two communities and started this fund, which has done extremely well. But unfortunately, as I said, the AUM or the assets under management has not been very encouraging. In 2009, Taurus came out and officially took permission from SEBI as a Sharia compliant fund. So while both of them claim that they are first, but Taurus is officially the first Sharia compliant mutual fund. Later on, Tata Ethical Fund have got their fund certified from TASIS. So today, as on today, Tata Ethical Fund is certified by TASIS as a Sharia compliant fund, which means that they do get the audit done, they do get the screening of the stocks from TASIS. Taurus Ethical Fund follows the S&P Sharia list, but it does not have the certification. Taurus is a smaller company when compared to Tata. So that's the reason why most of the people invest into Tata and not into the Taurus. But my recommendation is, because it's a mutual fund, if the risk is very low, when you don't have a choice, you should invest into both. Probably that's a good way of diversification. So mutual funds, there are only two, Tata Ethical Fund and Taurus Ethical Fund. ETFs, this is very interesting. I think just the previous speaker from Motilal Oswal has talked on length about the ETFs. But here I would just like to mention, he explained to you what is ETF, what is passive, what is active investment. For a Sharia compliant investor, there is one index fund, the main index fund, which is the Nifty, which is the Nippon India Sharia Bs. This tracks the Nifty. What it basically means is, the Nifty has got 50 stocks. Out of the 50 stocks, they pick up the Sharia compliant stocks, drop out the non-compliant, and that index is called the Nifty 50 Sharia. There's another index called Nifty 25 Sharia. Not many people know about it, both in the industry also, but there is an index called the Nifty 25 Sharia. There's no product for that, but the index is there. So ETFs, if you want to invest in ETFs, Nippon India Sharia ETF is one. Second one is the gold. There are different asset classes for which ETFs are there. Gold ETFs are there. So gold is again very important for a Sharia compliant investor because of asset allocation. Because we do not get into the debt products, the gold is a very important asset class for us, and we get into the gold. There's no silver ETF in India, but very recently SEBI has given a permission for a silver ETF, and you can very soon look into a silver product, a silver ETF product too. Having said that, how many Sharia ETFs are there? Officially, only one, that is Nippon India Sharia ETF is there. But if you look into Nifty IT index, which has a composition of 10 stocks, at this point of time, all the 10 stocks are Sharia compliant. So you can safely say that Nifty IT index is also Sharia compliant. Similarly, pharma, which has got 10 stocks, incidentally, all 10 stocks are Sharia compliant. So another opportunity for you to get into the Nifty pharma ETF. So Nifty 50 Sharia, Nifty IT, Nifty pharma, the gold, any of the gold ETFs or most of the gold ETFs are an opportunity for the passive investors. For the active investor, it is a mutual fund, it is a ETF, and then there's a direct stocks. Now coming to what is a small case. Small case is another new product which has come into the market. I don't know how many of you know about it or heard of it, but it's gaining a lot of popularity. And small case has been a very important kind of, holding for us, or an opportunity for us to launch some new products in the market. And we can proudly say that Sensage is one of those who have launched this small cases to give an opportunity for the Sharia investor. Basically, small case is a basket of stocks which investment advisor or a research analyst picks up his idea, theme, creates a basket of stocks and displays it or showcases it on a platform called the small case. Small case is a technology platform. It's partnership between an investment advisor and the research assistant with the technology has brought the small cases. There are more than 200 small cases which are there, but none of them were Sharia compliant. So in March 2020, this year, what we did is we looked into the ETFs, we looked into the list and created small cases, different kind of small cases into each category. For example, if a mutual fund, if a Sharia compliant investor wants to have a diversified portfolio into different categories like large cap, mid cap, small cap, he did not have an opportunity except to invest in the diversified two mutual funds. So we took the list of the stocks which are from the large cap based on AMFI guidelines, created the small cases called the Sensei, Sharia, large cap, mid cap, small cap, pharma, IT. And then we also tried to create a product which is very, very low risk. I'm going to come to that in a short while. But before that, so small cases is another product where you can say it is something like cloning of the mutual funds. So if you cannot get into the 2000, there are 2,200 mutual funds with 36 lakh crores of AUM. Unfortunately, there are only 2 mutual funds which are Sharia compliant. AUM, if you look into it, there's less than 1,500. Now that is a community problem where they don't participate. Why doesn't the community participate? Because awareness is not there. It is you youngsters and you people of the next generation who need to understand this and then take it to the community, take it to the public. Again, I repeat, it is not so for someone, it is for everyone. So direct stocks is another one. So this is a summary of what are the products available. One is a mutual fund. So Tata, Taurus ethical funds are there, gold fund. Not all gold funds are Sharia compliant. Why do you think they're not Sharia compliant? What is an ETF or what is a gold fund? Basically, in the world, there will be stock of gold. Against that, the units are issued. So if the stock is there and it is backed up by the security, by the commodity, then why is gold fund not Sharia compliant? Not all gold funds are Sharia compliant. I'll just come to that in a minute. So one is, these are the 4 funds. These are not certified ETF. IT and pharma are not certified as Sharia compliant, but as long as their constituents are Sharia compliant stocks, they are Sharia compliant, and we actively participate in that. So these are the 8 small cases that we have created. Please do have a look at it. The idea was to get people a variety of products for them to invest based on their risk profile. You know, Mahavir is talking about the risk profiling. Personal risk profiling is very important, but it's not advisable to get directly into any of the sectoral small cases. You always start with the power of 3 ETF, which is the lowest risk kind of an ETF. You can have a look sometime, when you go back. How have these funds done? The performance of ethical funds, that the Tata and Taurus, have done extremely well. They have done compared to the Nifty, they have done well. So to say that the opportunity is not there and to invest only in Tata and Taurus is not a good opportunity, is not correct. Both the funds have proved that hum bhi kisi se kam nahi. Let's put it this way. So both the funds have done extremely well in the long term. And then they have the Sharia Bs. Now, this is a comparison of Sharia Bs with Nifty 50. Nifty 50, as I said, has got 50 stocks, whereas Sharia Bs has got 20 stocks. So if you do a comparison of the 2 funds, you would find that ETF, which is Sharia ETF, has done much better or equal or much better in the last few years as compared to the Nifty. Now, small cases. This is very important and a very, something that we have worked on to find out and do a comparison and come out with a product which is very low risk. Let's look at it this way. What does an average investor do? An average investor who wants to be a Sharia compliant, he keeps the money in the bank account, right? And where does he keep it? In a savings account. When he keeps in a savings account, he gets interest of 3.5%, which he gives in charity because that's interest is not permissible. 2, at the end of the year, during the month of Ramadan, he also gives in charity the zakat, which is 2.50%. So if 2.5, so that means 1, he is not earning anything. Whatever interest is earned, he is giving in charity. He has to give, which is obligatory of giving zakat of 2.50%. Plus, inflation loss is there. There is a loss of power of purchase because of inflation. So there are 3 things which are important. Inflation, zakat payment of 2.5%, although scholars say that it's not a comparable one, you should not talk about zakat when you're talking about money. But try to be on a practical side. I am saying this. It is my personal view that 2.50 is you are out of pocket. So what we did is can we create a product which covers all these three, that is CPI plus zakat of 2.50%, and we created a small case called Power of 3 ETF, which is basically Nifty Sharia ETF, gold, and IT ETF. So we have some composition of these three products. There are three ETFs, two asset classes. Why gold? Because it is inversely proportional to the equity. And we found out that as compared to the CPI plus, this orange line is the CPI plus zakat, the blue line is the Power of 3 ETF. It has outperformed. It's a very low risk kind of a product which is there. And I would recommend that a beginner should start with Power of 3 ETF, then he should graduate into a large cap, then a mid cap, then the sectoral fund. So if you go back and if you are looking for investment, looking only into the small cases, let's go here. If you're going only into investment and looking into the universe of small cases for diversification, you should start with Power of 3 ETF, then the large cap, mid cap, and then in the sectoral funds like pharma, auto, or chemicals. Normally, people, what they do is, if the minimum investment, let's say in the chemical and agri, is only 50,000, and the performance or the returns are high, they go directly into the chemical and agri, which is not a good strategy. That is the reason why you need to have an investment advisor or consult an expert before making an investment. But my choice would be that you start with Power of 3 ETF, then get into the other small cases. How do we create this small case? What we did is, when we're picking up a stock, we looked into each of these indices and then filtered this Sharia stocks within the index or within the index. And then we put some financial parameters to say that I'm looking for a net company. There's a big choice. There are 1,200 stocks. So how do I shortlist and get into the best? So one is a net profit margin of less than 7%. If there's anything less than 7%, we eliminate it. We don't look into any stocks which are less than 7% NPM. That's net profit margin. The return on equity has to be a minimum or above 15%. Return on capital employed has to be above 15%. But then we give more weightage to ROE than ROCE, because ROCE can be because of borrowed funds. So ROE is one important criteria for us. NPM is one. Then the ATR is one. The PG pledge, if there's any, especially the promoters share holding, have they pledged them? Because if the shareholder has pledged his holding, it means that he's got less interest and he's coming out of it. Debt to equity is another ratio that we look into it. Based on this, when you do a filter, then we also look into the market cap and select some stocks and created the small cases. I've got 8 small cases. If I have time, I can show you how they have performed. It's not now, these are the fundamentals analysis that we do. Other than the fundamental analysis, we also do the technical analysis or look into the technical chart where where we look at an RSI of 50, that it has to be about 50 plus and minus, the high and low, we keep it as 50. We look into the super trend. We also map into the candles which are on monthly kind of a thing, and then select the stock which has got a long run. That means they have consistently, on a buy kind of a thing. All our small cases are not for short-term traders. Again, let me cover that a little. One is a long-term investor, the other is a short-term investor. If you are a question that you need to ask yourself is, are you a wealth creator or a trader? If you are a wealth creator, then you're a long-term investor, like how Vahavi spoke a little some time back, that if you are creating wealth, then it is a long-term journey and it is 5 to 7 years. We would call it minimum 5 years. The reason for that is, again, statistics and studies have shown that the probability of losing money becomes 0 if you are invested in the market for 5 years. It is not how much money you make. The probability of losing money becomes zero if you are in the market for 5 years. While during the interim period, you could make more or less, but then 5 years is a good time horizon minimum. A trader is somebody who does a trade. Let me equate it something like this. If you are got an electric shop, what do? You look for what are the best switches there, which is the cheapest one, is Maro good, Legrand is good, or whatever it is, and then you buy and sell and look for a turnover. So you're constantly looking into the market and then trying to replace the stocks with new stocks. As a result of that, if you as an investor, if you try to do that, you need at least 6 to 8 hours on a daily basis to study the market, do the reports and other things. Most of us are not traders, they should be investors. The problem is that we turn out to become the traders when you are an investor. If this one difference you understand, you are half the battle is won. I will just try to conclude it with one or two more things, and that is the gold ETF. As I was saying, in 2013 or something, the government had allowed the ETFs or the fund managers to lend gold in their vaults to banks so that the gold import is reduced. Now, this lending makes the ETF non-compliant. If there is any ETF or any gold fund which has lent the gold or earning interest on lending this gold to banks, then it becomes non-compliant. The second could be because of investment in the money market. If in the money market, here if you see it, IDBI gold fund, it has got 8.55% interest income from money market. So that becomes non-compliant. So not all gold funds are Sharia compliant. Some of the gold funds are Sharia compliant. So you need to check into that. Two is you also, when you are investing into the gold fund, you look into the size of the AUM because of liquidity. A good one would be something like SDFC Gold ETF or Axis or maybe Kotak Gold Fund. Now, gold funds which have got a small AUM may have a problem in liquidity when you're trying to come out of it. Having said all this, where you should be cautious is that in the name of Sharia or in the name of ethical investment, there is a lot of mis-selling. Of late, this mis-selling has increased from some of the regulated bodies. For example, portfolio managers. A lot of portfolio managers I meet in the conferences and they say they have got a Sharia product, which is a PMS product. When you ask them a question, they say, a question that portfolio, they say that we do not invest into financials, we do not invest into Kingfisher, we don't invest into those kind of stocks, we are only into the sectoral ones which are like pharma. Not all pharma stocks may be Sharia compliant. Not all IT stocks may be Sharia compliant. The moment you ask them, do you have a certification or are you taking subscribing to any list which is Sharia compliant stocks? They don't. So that is one where you need to be very careful. Another product which I have no hesitation in coming out openly and then talking in this forum is ULIP. ULIP insurance product which is called the Bajaj Alliance Pure Stock Fund. Let me give you a little history about this product, and so that it becomes much more clearer. Insurance product cannot be launched without risk purchase. IRDA does not allow any insurance product to be launched without risk purchase, which means that you need to have an insurance purchase. Now, once you buy insurance purchase, once you have premium, you are paying a premium, it becomes non-compliant. So how can an insurance company launch a Sharia compliant product? It cannot. Now, there are four, I have done a study and found out that there are 4 stocks which are non-compliant in the present portfolio, which is the latest fact sheet. They have always invested in the money market and GSEC. I cannot recollect the year in which it was, but basically this product, Pure Stock, when it was initially launched a few years ago, what they had done was, they said that you need to buy the insurance, And at the end of the period, when you buy the annuity, you had a choice to buy the annuity or not to buy the annuity. But the portfolio was Sharia compliant and they were taking the Sharia list from TASIs. But later, IRDA came out with a regulation to say that you need to buy an annuity and it is mandatory. So the moment you buy a annuity, which means that there is a fixed income and it becomes non-compliant. Only based on a few years ago, when it was Sharia compliant and when an investor had an option not to choose annuity on the maturity of the product, it was Sharia compliant at that stage. It's no longer Sharia compliant now, while the product name remains the same, which is pure stock fund. So I would resist and strongly recommend that such kind of mis-sellings do happen while they have not named Sharia compliant here, but when the selling is being done by the banks and the insurance companies, they sell it as a Sharia compliant product. I think just to have an idea as to what are the products available in the secondary market for the Sharia compliant investor today, and how it performs when compared to the conventional ones, the conventional products. We come out with this Sharia board, the dashboard on a monthly basis to find out that there are 2 mutual funds which are there, which are Sharia compliant. There are 8 small cases which are Sharia compliant for you, and then the indices. And then the indices where there's Nifty Sharia 25, Nifty 50 Sharia, and then we have given a comparison of a non-compliant Nifty 50 with a Nifty 50 Sharia, how they have performed. Similarly, in the 500, Nifty 500 Sharia versus Nifty 500 non-Sharia. With this, I will close and then take any questions that you may have. But before I conclude, I would like to conclude with a message to say that it is a religious requirement of a Muslim to be invested. Not investing or or rather it is un-Islamic to hold money or invest otherwise, that is in a non-compliant product, when a Sharia compliant opportunity is present, is un-Islamic. This is my personal view. Give a little thought to it, think about it. Concluding, I have got 2 or 3 messages to give you, especially to you youngsters. Please do study. I have spent more than 4 decades trying to come out and then study and then find out ways of how observant Muslim can participate in the economy. Just to give you a little background, I have been a banker. When I was very young, I came out of the banking because it's not permissible to get into the banking, because it's haram. Then I found that the whole economy is interest-based. I went into an exchange company, found out that the exchange company is not a permissible activity. Went back into the banking. Since then, we have been trying to find out some kind of an opportunity window for the observant Muslims to get participate. And believe me, I have found a lot of barakah. When I invest into Sharia stocks and Sharia portfolios, I have been doing it. All you youngsters need to participate in the market, create an investor awareness among the community, and let them be a part of the economy so that the products come to us, so that an ELSS is created, so that we have an equal opportunity in the market, in the mainstream, as an observant Muslim. With these small short words, I will close it and then wait for the questions if there are any. Thank you so much for this opportunity.
Thank you, sir. So there is a question in the chat box.
Yeah, 1 second. Does Sharia allow to work in a banking job? I think that's a very good example which I have just shared with you. I've started my career as a banker at a very early stage in life where I didn't have, I was not conscious about what is allowed, what is not allowed. And I came out of it, went into an exchange company, but went back into the bank, but this time with a firm resolution that I will work, find out understand what is the difference between Sharia and non-Sharia, and then come out with some alternatives. The view of the scholars is that if you are already there into the banking stream and you do not have any alternative, then they do not recommend that you just overnight leave your job and come out. What you should look for is, because you've got responsibilities, what you need to do is find out an alternative, work out an alternative, and then come out of the job. And this is the scholar's view, and I firmly believe in that, and I have been a follower of that. I have practiced it. Yeah. Is there any other question? I don't see any other question.
Sir, now normally we give our money. We don't lend money. But as an investor, we are a salaried person. We are a working class. We don't know what is the businessman is going to do with our money, and we don't have time and energy even to do research on it, whether he is playing around with our money or is actually doing a business. So therefore, we lend him the money so that he is bound to pay us, a certain rate for a capital appreciation. So,
as I said, yeah. So if I've understood your question properly, what you're saying is that you are a working class, you don't have time, you don't understand the product, you are not expected to do all that, and then that's the reason why you lend money. Now, that's not a good reason to lend money to somebody on interest, because it does not allow. The Sharia does not allow. What is important for you is to make basic information. That's why I said, I quoted the saying of Umar Raziallahu Ta'ala, say that you go out into the market and find out the minimum information. Otherwise, you need to also be with a good advisor. And that's the reason why I talked about regulation in the beginning, to say that you need to look into the regulated market, need to look into the registered investment advisor who has got a fiduciary responsibility in advising you. And so you cannot take an excuse to say that I don't have time. It is something like the law is there. You are going on a road and you cross the red signal and say, I didn't know that I should not cross the red signal. That is not proper. You are bound to have a knowledge. You can say that I do not know the other regulations, the minute ones for which I need to depend on an advisor. So there are advisors, people are there. Talk to somebody who knows it, not talk to somebody who does not be your neighbor, not sitting in the drawing room and then not asking your colleagues and then doing it, or asking somebody who's a realtor. There are umpteen cases. I don't have time here, but I can talk to you. In our experience as an advisor, we come to hear a lot of people who take advice from the wrong people. What is an advisor for? What is a regulator for? An investment advisor is there. You need to be with an investment advisor. That's what I would say. It's not a good excuse to say that. And now that is what we are trying to make the public. That's what I'm trying to say. Create an awareness. Organize yourself, small groups, get an expert, let him talk. That is exactly what you're doing. And that is exactly my appeal to you youngsters, to create an awareness in the community.
Yes, next question, please.
Hello?
Yes, sir. Is it permissible if we just want to earn dividends, then capital appreciation of all the companies?
Okay. Now, what if you invest in the stocks and mutual funds? What are the types of income that you get? There are two. One is capital appreciation, the other is dividend. Scholars, now there is a difference in view of the scholars, but generally it's very simple. It's not difficult to understand. One is a dividend. Dividend is a small amount of income that you get at the end of the year when the company declares a dividend. Two, when you buy a security and sell the security, there's a capital appreciation or a capital gain system. Scholars are of the view that if you are a trader then you should pay both on the capital gain as well as the dividend. That is the purification. Some of us view that both capital appreciation, capital gains and on the dividend you should pay. Because if you're a long-term investor, then the company is doing it and the dividend is being declared, and so the dividend only is there. In my view, TASIS has got a view that you need to pay both on the capital gain as well as the dividend. And I think that's the right kind of a thing. My personal view is that you pay both on the capital gain as well as on the dividend. Mind you, in capital gain, when it's a long term, up to 1 lakh, there's no tax. Over and above 1 lakh, then it is 10%, which is much lower when compared to any other tax rates. For example, even on a property, it is 20% tax on a capital gain. Whereas on equity, it's only 10%. Equity is the best kind of an investment for a long term, for a Sharia investor to participate in the risk. Let me give you another some thumb rules. Any fixed deposit will give you plus or minus inflation. Gold will always give you 1.5% above inflation, a return of 1.5% above inflation. So when you hear your ladies talking about "Mujhe pata hai gold kharido," what they actually mean is that it will cover the inflation. Real estate will always give you 3% above inflation. Many of you will not believe it, but when you do the actual calculation and see it, it's a different subject altogether. It will take a long time. But what I'm trying to say is real estate gives you 3% above inflation. It is only equity, whether it's in the form of mutual fund, direct stocks, small cases, ETFs, whatever it is, it will give you inflation plus 7%. I hope I've answered your question.
Sir, can you give us an overview of Islamic banks, sir? If we are not falling short of time, then.
Yeah, it's an Islamic bank. I would leave for some other speaker to talk about it because one, there is no time. Two, I can tell you the history and the developments in India on the Islamic banking, what has happened. But it has, I would say that we should not discuss about it. The reason being is it's not in the immediate future. When it is not in the immediate future, why should we talk about it? I have got some statistics. I have shared some statistics with you. I can share some more statistics, more detailed one, to show that what is available in your hand, you are not participating in that. So why are you talking about something which is of a distant future? I'll give you some statistics. In the mutual fund industry, in the assets under management and the capital market, I have told you out of the 4 regulators, there's only SEBI regulator whose products are Sharia compliant, where there is nothing that you need to do, amendment in the regulations, amendment in the laws, nothing you need to do. The whole gates are open for you. There are 1,200 stocks which are available for you. There are 36 lakh crores which are under assets under management in the mutual fund. Out of that, Sharia compliant AUM is less than 1,500 crores. When we talk of the population, we are 20 million Muslims. Number of investors in the stock market. I don't have the number of the stock market, but I have these mutual funds. Tomorrow you can ask the Tata guy how many investors he has. It is less in these 2 mutual funds, Tata and Taurus, they are less than 40,000. Out of these 40,000, many of them are non-community people. The reason why they have come into this particular fund is because they know it is basic principle of finance, because they know this is a strong one, because they understand finance. If you talk about number of taxpayers, I don't know how authentic it is, but there are 6 lakh Muslim taxpayers. Why cannot there be a tax saving scheme which is Sharia compliant? It's because we don't participate. It is because we are not aware of it. I have been in the industry for long. There are so many changes which happen in the industry. The regulator at one time had said that there are too many mutual fund schemes, and all the asset management companies, they should reduce the number of schemes. I have approached the AMCs and told them that instead of closing the scheme, look for one scheme which is non-performing scheme, change the composition of the portfolio to a Sharia compliant portfolio, and make an ELSS scheme. Do you know what the answer was? 50 crore लेके आके बताओ मैं कल ऐसे scheme निकालूंगा. It's a shame. I'm sorry to use the word, but I've been interacting with all the CEOs of the AMCs, and I have been in the industry. Very sadly, we cannot participate in the market. That's only because we're not aware. 60% of the community is into self-employment and small trades. They do not have those, they do not know what the stock market. They only know the stock market haram hai, nahi, so they come and then they do trading without understanding what the stock market is. I've given a figure of less than 2,000 in the AMC, are the assets under management in the mutual fund. You know what to hear the figure of how much money we have, our community has put into the Ponzi schemes? More than 20,000 in only one scheme, into one product or one investor. Where is our money going? I'm sorry to say that, but that's what it is. So, so let's not talk about the banking, which is far, far away. It will come, inshallah. It will come. It will find a way if you participate and show it that this is the right kind of a product which is there.
Thank you, sir.
Mr. Moderator, can we, if there's no other question, can we close?
So I had one question. May I go
Sure,
for?
Please.
So, like, what is the purification in Sharia investment? If you could just throw some light over that.
Purifying. What is purification? Purification is nothing but the calculation of an interest of an income which has been generated because of non-permissible activity. You remember we talked about the second, what do you call it, criteria to say that it has the, if the core activity has to be Sharia compliant. If the secondary activity is non-compliant, we still call it Sharia compliant. So there is a method how we calculate the interest income from a non-permissible activity, and that interest amount has to be given in charity without expecting any reward. Earlier, it was not possible. Today, as I said, there are two methods of doing it. One is removing or purging on the dividend only. The other is on the capital gains also. So Tasis is one company which is provides the does the purging calculation. Even there, you know, the costs were high of Tasis at one particular point of time. Now they have made it very simple to say that if you are investing into a Tata and Taurus, which are Sharia compliant mutual funds, then the purging amount is very low. And you don't need to pay them the fee. They have calculated and said that it is less than 1%, which you can remove it at the end of the year. If it is stocks, then depending on the stocks which you're investing and the activity of the company, the interest component, there is a method, they have a technology, they have the methods to do it. I'm not quite conversant with that, but we recommend Tasis for the purging one, where they will do the calculation, they'll give you the amount to be purged, and that amount will be given in charity.
Okay, so thank you so much, sir, for answering.
Salman, you have any question? Raise your hand.
There is a participant who has raised the hand. Just unmute and please ask the question. Mr. Salman Vaniyar.
Assalamu alaikum. Sir, I have one specific question. If someone wants to start a Sharia compliance agency, what angel broking is there? There are some agencies, no? So similarly, if someone wants to start that sort of agencies, is there any agencies available for this Islamic perspective that we can start and ask people to invest according to Sharia compliance? Thank you.
Agency, I think what you mean is whether you require any specific, is there any company, a broking house, is that your question? Okay,
Yes.
Again, let me take you back to my first question, the opening one. I knew that this kind of a thing will be there. That's the reason why I talked in the beginning. Let me repeat it. To say that if you are looking for providing a service which is investment service, which is a Sharia compliant nature, and you want to be qualified, as I said, the first step would be that you do a certification from NISM on mutual funds. It is a short course. You will get a handbook on the mutual funds regulations. You can prepare for 15 days. Go and appear for an exam. The fee is only 1,500. The passing mark is 50%. There are no negative marks. That's the simplest one. So once you qualify, that is, once you get a certificate from NISM, then you register yourself with AMFI as a mutual fund distributor. You can distribute mutual funds, that is the Tata and the Taurus, and you will get a commission. That's the first step, beginning. Second step, you can get into a dealer certificate, again from NISM, pass the dealer certificate, then you become an authorized person or an AP. What we earlier used to call a sub-broker, now we call it an authorized person. Then you can take an agency of any of the brokers. It could be Shariah, it could be Motilal Oswal, it could be Angel Broking, it could be anybody. You have a terminal. The only restriction that you need to put there is that all my investors or all your clients who onboard, they will do only Sharia compliant trading, only in Sharia compliant stocks. They will not do any margin trading. They will do no futures, no options like what I showed you in the slide. And that is exactly what we do. Third, if you want to upgrade yourself to the next level, then QPFP is again another qualification where the industry experts take sessions, and then there's a course of 50 sessions or something like that. It's about 6 months part-time. Fee is about 40,000 or something like that. You get all the experts for financial planning, how you do financial planning and all that's got nothing, has nothing to do with non-compliance. That's a part of the general stream. You do that course, then you can become a qualified advisor. But you're still not a registered qualified advisor as per SEBI. So if you want to be a registered investment advisor like of SEBI, like Sensage, then you need to do some more certifications. You need to have a 5-year experience, and then you can start your own business as an advisor. And believe me, there's a big demand of advisors. It's a tough job because the regulations are many, but when you follow it, you'll get a lot of satisfaction in that, and you are regulated. And that's the proper way to do it. So do the things in a proper way. So depending on your capabilities and other things, you can start with mutual fund and then upgrade yourself.
Thank you very much. Assalamu
alaikum.
Sir, can I ask one more question?
Please go ahead.
Yes, sir. Which one we should prefer, like buying direct gold or gold ETF as per Sharia?
Come again, direct ETF.
Which one we should prefer, buying direct gold or gold ETF as per Sharia?
Sharia has got nothing. They both are Sharia compliant. Buying direct gold, that is the physical gold, is also Sharia compliant. Buying ETF is also Sharia compliant. Buying gold mutual fund is also Sharia compliant. It's got nothing to do with Sharia compliant. The only thing is when you're getting into the mutual funds and the ETF, you need to make sure that that ETF or that AMC or that scheme is not lending gold on interest, number one. Number two, the money market investment which is there, it is not, it is within the parameters, within the limits. That's all.
Okay, sir. Thank you.
Yes, Munir, please ask the question.
So what is your view about cryptocurrency?
What's your view about cryptocurrency?
I was surprised that it has not come. Normally, that's the first question which is thrown up. Mine is very simple. Cryptocurrency is not recognized by the regulator. I would not like to see. Also, I do know what is cryptocurrency, but then when it is not regulated, why should I get into it? Simple answer. I would not like to look into it. I would not like to forget about recommending my clients. I would not like to look into it also unless it is recognized by the regulator.
Thank you. Thank you for an excellent session and informing us about the Sharia investment. On behalf of Anjuman-I-Islam, Alana Institute of Management Studies and BSc Investor Protection Fund, I once again thank Mr. M.S. Shabbir for taking the session. Thank you, sir.
Thank you so much.
Yeah, thank you so much, sir.
Thank you.
Thank you so much, sir. Thank you.
Welcome.
So should we start the next session?
Just wait, Sir Ravikant is joining in 2 minutes.
Okay.